The year 2020. A year with so much potential and so much promise. Wound up being a huge disappointment for many, especially for Dan Bilzerian. In a CNBC special with Kevin O'Leary, Dan gave a tour of his Bel Air mansion. Here he claims he bought it for $65 million.
He reportedly paid a mind-boggling $65 million for this mega mansion, and he invited me over to check it out. I'm dying to see this place and find out how a guy who appears to party for a living can afford it all.
Apparently he can't, as it was later revealed to be a rental, which he got evicted from, and his company Ignite was paying the rent. As for Ignite, since they're a publicly traded company, that summer their financials were released to the public showing losses of over $50 million in 2019 and losing millions more every month. Ignite was also in the middle of a lawsuit with their former president, Curtis Heffernan, claiming he was unjustly fired for refusing to approve personal expenses Dan was trying to put on the company credit card. These expenses included a $15,000 ping pong table, $40,000 rock climbing wall, and $793,000 yacht rental. Then in October, their exclusive distributor in Canada, Namasta Technologies, terminated their contract. Seeing the company's burn rate and balance sheet, it looked like they would run out of money by the end of the month. Before the end of October, Dan had to inject $25 million of his personal money into Ignite to save it from bankruptcy.
People have been having a panic attack because I haven't been posting lately, but I've been working. And, these online bloggers talking, saying that I'm going broke, Ignite's going broke. I ain't ever going broke. Just put $25 million in Ignite. We had an idiot first president, he's incompetent, I fired his ass. Our new guy is crushing it. We're killing it with Nick. It's all the 1500s are sold out. Just got a big order in, so they're good. Going to have a profitable fourth quarter.
If you look at the financials, it showed that by the end of Q3 2020, Ignite had already burned through almost $100 million of investors' money. Dan couldn't raise capital through traditional means because the gross mismanagement of Ignite was so obvious that there was no chance any investor or lender would give him any money. Remember, you can only lose $100 million with almost nothing to show for it once.
It's fooled me once. Shame on you. It fooled me, we can't get fooled again.
So now, thanks to Dan's capital injection, Ignite was able to make it out of 2020 alive. But for the losses that kept accruing, this could only go on for so long before Dan personally ran out of money and could no longer bail out Ignite. The bloggers and YouTubers were circling Ignite like vultures, waiting for its inevitable demise, when on January 19th, I saw this in my Twitter feed. Ignite released its unaudited fourth quarter 2020 earnings report announcing profitability with over $10 million in revenue and a net income of $4.9 million compared to $6.6 million in revenue and a loss of $21.8 million for the prior 3 quarters combined. Needless to say, this was a good quarter for Ignite. Although this massive sudden turnaround raised a few eyebrows and a few red flags, so in this video we're going to take a closer look at Ignite's financials and see if we can make some sense of all this. Alright, let's dive right into this. We're going to take a look at Ignite's balance sheet and earnings report. And we're going to summarize it, we're going to look at key factors, and we're going to make an assessment about the latest Q4 2020 earnings announcement. Keep in mind that all the dollar values shown on these financial statements are in Canadian dollars, so you need to convert it to a currency that you're familiar with to have a more accurate understanding of the values we're talking about. So to start this off, because the fourth quarter 2020 earnings are not available, at least the audited version, are not available for us to review, let's look at the most current audited earnings report and balance sheet, which would be Q3 2020. So we're first going to take a look at the balance sheet. You can see here at the top, this is as of September 30th, 2020, starting with assets, both current and non-current. For those that don't know the difference between a current asset and a non-current asset, a current asset can be utilized to benefit the company within 12 months, whereas a non-current asset is more of a long-term benefit to the company. So the critical row we're going to look at under current assets is the cash and cash equivalents, where we can see here that Ignite has about a little over $900,000 worth of cash. That's why back in October, when people saw the earnings statement, there were reports showing that Ignite only had a few more weeks left solvent because they were burning through over $1.5 million per month. You do the math and they're not going to make it through the end of the month. So if you look at the total current assets, they have a little over $14 million. Now, if we go down here and we look at liabilities, current liabilities, $6.2 million. So if we look at the non-current liabilities, the big number that stands out to me is the convertible debenture for $26.2 million Canadian. Overall, that brings to total liabilities to just under $34 million. And if we come down here, we could look at accumulated deficit of $107 million Canadian, which comes out to around $90 million USD. This is why I stated previously that Ignite had burned through almost $100 million to date. Okay, so now we're going to look at this quarter's earnings report. So at the top we have the sales revenue of 1.7 million and then the cost of goods sold 1.2 million for a total gross profit of a little under 500,000. So if you do the math, that is a gross profit margin of 28%. Which means they only have a 28% wiggle room for expenses, whether it's, overhead and marketing or whatever. Everything needs to fit within that 20% gross profit margin in order to achieve any amount of net profit. That is not a good profit margin. You are typically, you're going to want to see, especially for goods like these, well over 50% gross profit margin. Now let's look at operating expenses. So for this, the two main costs are going to be general and administrative. That is basically your staff and rent and all the main expenses for running a business, paying people salaries and whatnot. And then of course the marketing and promotions. People don't just spontaneously buy your product. You have to market it and present it to people in a positive light to get them incentivized to make a purchase. Well, this quarter at Q3 2020, they actually had a pretty reasonable marketing budget. As you could see from a year ago, the marketing budget was 6.6 million, which is, if you do the math, is more than 15 times higher than the marketing budget for this quarter. Primarily because Dan wasn't allowed to throw any kind of lavish, expensive parties. During Q3 2020, pretty much everything shut down. You can't really travel. So that put the kibosh on him kind of burning through all of investors' money through lavish parties and vacationing. But anyway, if you look at the total operating expenses, it's 1.68 million. So to get the total income for operations, all you do is you take the gross profit margins and you subtract out the operating expenses, and that's where you get the about roughly $1.2 million. Then below that you have other income and other expenses, and these are usually not a big number. The vast majority of our expenses are going to come from the operating costs. So then when you come down here and you get your net income, keep in mind everything that's in brackets means a loss. That's the equivalent of a negative number. All you have to do is add gross profit, subtract the total operating expenses, add other income, and subtract other expenses. And for Q3 2020, the net income before taxes was 5.8 million. So now that we looked at all the key variables for Q3 2020, the latest audited earnings report that we have available, for their balance sheet and earnings statement, I made a chart for the last couple years from Q2 2019 through Q4 2020. So here we look at sales revenue, we look at the trend from that. In Q2 2019, it was a little over 2 million. Q3 2020, it's gone down, it's 1.7 million. So it's been pretty stagnant over the last 2 years. You look at cost of goods sold, you subtract out, you get the gross profits. More importantly, I tend to look at the gross profit margins to see what's going on with that. Or is it expanding? Is it contracting? Then below that, we have the expenses. the operating expenses, you have a row for the general administrative cost and then a row for marketing. Remember, I said that the two biggest operating expenses is going to be your overhead, your administrative costs, and your marketing. Below that, we have total operating expenses, where you combined everything related to operations. And then below that, you have the combination of your gross profits and your operating expenses for a total net operating income. And then when you subtract out the other income and other expenses, you get the net income before taxes. And then the last row we have from our balance sheet, the cash and cash equivalents. So we can kind of track, how much cash they have on hand. So if you look at the far right column, Q4 2020, you could see with $10.1 million that that's a very anomalous quarter. Like the sales just absolutely exploded that quarter relative to, all the prior quarters. If we just put it in a chart, you could see the Q2 2019 through Q3 2020, the sales kind of bounce around between 2 and 4 million. And then all of a sudden they just shoot up to 10 million. I'm not sure where that came from. Usually if you see a huge jump like that, the marketing costs went up, but we're gonna have to wait till the actual earnings report comes out before we can determine how that happened. But given that net operating income is at break even, what that means is that the total operating expenses and the gross profits are essentially the same, because to get your net operating income, you have to subtract total operating expenses from gross profits, meaning that the $4.9 million has to have been in the other income segment of the earnings report. So my guess is, of the $25 million that Dan put into the company back in October, roughly 20 million of that went to debt. If you remember that row in the balance sheet saying convertible debt of a little over 20 million USD, that he paid that off with about 20 million, and then he put a little over, probably around 5 million into the business, which is going to show up under other income. But until the audited report comes out, we won't be able to spot exactly what's going on with everything.
I got one, yeah. I got me a bad one, fiery, like she is a dragon. My diamonds, ice, like Brick Squad, 270. I'm rolling, pass me the OG, low focus. I'm wavy like oceans.